NGEx Minerals serves as a high-growth exploration and development vehicle within the Lundin Group of companies, specifically focused on the discovery and expansion of Tier 1 copper-gold systems in the Vicuña District of the Andes. NGEx was originally formed as a spin-out from Josemaria Resources Inc., formerly NGEx Resources Inc., a move designed to isolate and accelerate the development of its high-potential exploration assets, while the parent company focused on the feasibility and construction of the Josemaria project. The positioning of NGEx Minerals is inextricably linked to the Vicuña Playbook, a systematic approach to district-scale exploration pioneered by the late Lucas Lundin. This methodology emphasizes long-term capital commitment, aggressive drilling of high-grade cores, and the leverage of shared infrastructure across multiple deposits. NGEx currently manages a portfolio headlined by two flagship assets, the 100% owned Lunahuasi discovery in San Juan, Argentina, and the majority-owned Los Helados deposit in Region 3, Chile. These projects are situated along a primary structural corridor that also hosts the Filo del Sol and Josemaria deposits. Geological evaluation and exploration dynamics of the Lunahuasi discovery. The Lunahuasi project have evolved from a greenfield target to a high-grade copper-gold-silver system of considerable scale in less than 3 years. Located in the San Juan province of Argentina, Lunahuasi is characterized by a unique geological setting where multiple mineralizing events have overprinted one another, resulting in grade tenors that are among the highest reported globally in recent years.
Evolution of drilling campaigns and volumetric growth. The exploration of Lunahuasi has been conducted through a series of drilling phases, each designed to expand the known mineralized footprint and test the depth potential of the system. The Phase 2 campaign was instrumental in demonstrating the scale potential of the system. Notable results included DPDH-021, which intersected 772.5 meters at 1.60% CUEQ, and DPDH-022, which returned 726.5 meters at 1.66% CUEQ. These long intercepts confirmed that the high-grade veins initially discovered were part of a much larger mineralized stockwork and porphyry-related system. By the end of Phase 2, the mineralized volume had expanded to nearly a kilometer in vertical extent, and the deposit remained open in all directions. Phase 3 and the ongoing Phase 4 programs have focused on testing the boundaries of this system and identifying the Saturn Zone, a deep-seated high-grade target. The discovery of ultra-high-grade gold in quartz veins, e.g. DPDH-032 with 27.4 meters at 23.17 grams per TU/AU, added a new dimension to the project, suggesting that Lunahuasi could potentially host a significant precious metals resource independent of its copper content. Geological modeling and mineralization complexity. The technical appeal of Lunahuasi lies in its multi-stage mineralization history. Management has identified 4 distinct styles: copper, gold, silver, high-sulfation epithermal veins, copper-gold porphyry mineralization, a porphyry system with a high-sulfation overprint, and gold-rich quartz veins. This complexity is interpreted as the result of a long-lived hydrothermal system situated at a major structural intersection. Resource analysis and strategic optionality of the Los Helados project. While Lunahuasi represents the exploration upside, the Los Helados project provides NGEx Minerals with a foundational resource base that ranks as one of the largest undeveloped copper-gold deposits globally. Located 9 kilometers northeast of Lunahuasi in Chile's Region 3, Los Helados is a large porphyry system that has been the subject of extensive historical drilling totaling over 93,000 meters. Mineral Resource Estimate and Tonnage Analysis. The 2023 Mineral Resource Estimate for Los Helados confirms the Tier 1 scale of the asset, highlighting significant contained metal across indicated and inferred categories. The resource includes a high-grade core of 510 million tons at 0.72% CUEQ at a 0.6% CUEQ cutoff within the indicated category. This high-grade core is essential for the project's economics, as it would likely be the focus of early-stage mining in an underground block caving scenario. The depth and scale of the mineralization suggests that Los Helados could support a multi-decade production profile. Joint Exploration Agreement and Infrastructure Synergies. NGEx Minerals owns approximately 69% of Los Helados and acts as the project operator. The remaining interest is held by Nippon Caserones Resources LLC, which is also the indirect 30% owner of the nearby Caserones mine. The other 70% of the Caserones mine is owned by Lundin Mining Corporation. This ownership structure is strategically significant as it creates a direct path for operational synergies. The proximity of Los Helados to the operating Caserones open-pit mine, 17 kilometers away, provides substantial optionality. Potential synergies include the sharing of processing facilities, tailing storage, and power infrastructure, which could significantly reduce the capital intensity of developing Los Helados as a satellite operation. Furthermore, the Joint Exploration Agreement, JEA, includes provisions where a party's interest is converted to a 0.5% NSR royalty if diluted below 5%, ensuring long-term value retention for the partners.
Balance sheet analysis, capital structure, and financial position. The balance sheet of NGEx Minerals reflects the typical profile of a major exploration company transitioning into the resource development phase. No operational revenue, high intangible asset value, and a reliance on periodic equity financing to maintain a strong liquidity position. Asset composition and liquidity trends. A comparative analysis of the company's financial position over the 2023-2024 period reveals the impact of aggressive fundraising and high exploration expenditures. The company's cash position saw a temporary decline throughout the first 9 months of 2024 as it funded the Phase 2 drill program and general corporate overhead. However, this was sharply reversed in the fourth quarter following the closing of a CAD $176.9 million private placement. By year-end 2024, total liquidity, cash plus short-term investments, had reached approximately CAD $198.6 million, providing a massive buffer for the 2025 exploration season. The carrying value of mineral properties remains relatively low on the balance sheet, CAD $6.2 million in Q3 2024, because accounting standards generally require these to be recorded at historical cost rather than fair market value. This highlights a significant value on the balance sheet, as the market value of the 18.4 billion pounds of copper at Los Helados is not reflected in this line item. Capital structure and shareholder equity. As of late 2025, NGEx Minerals maintains a clean capital structure with no long-term debt. This debt-free position is a strategic choice, as it maximizes the company's flexibility for future project financing or corporate transactions. The equity base has grown substantially through successive private placements. In October 2024, the company issued 16.1 million shares at CAD $11 per share. 1 year later, in October 2025, it issued 7 million shares at CAD $25 per share. This 127% increase in the issuance price over 12 months demonstrates strong market validation and minimal dilution relative to the capital raised. The shareholders' equity line item increased from CAD $73.5 million in late 2023 to over $195 million by mid-2024, and has since expanded further following the late 2025 financing. Expanded cash flow analysis, burn rate, and capital inflows. The cash flow statement of NGEx Minerals is characterized by high operational outflows driven by drilling and steady financing inflows from institutional investors and the Lundin family. Operational burn and exploration expenditure. As an exploration stage company, NGEx reports zero revenue from operations. Consequently, net cash used in operating activities is the primary metric for assessing the company's burn rate. For the year ended December 31, 2024, the company reported a net loss of $63.6 million, which was almost entirely driven by exploration and project investigation costs, $63.8 million, and G&A, $13.3 million, partially offset by gains on marketable securities. On a quarterly basis, the exploration burn varies significantly. During the Q3 2024 winter period, exploration costs were $6.2 million. However, during the peak drilling months of Q4 2024 and Q1 2025, quarterly exploration expenditures typically range between $25 million and $30 million. Free cash flow, FCF, remains consistently negative, with TTM FCF reported at approximately minus $81.4 million in late 2024. This is not a sign of financial weakness in the context of junior mining, but rather an indicator of the company's aggressive investment in its asset base. Financing dynamics and finder's fees. The company's financing strategy is notable for its efficiency and strong institutional backing. The two major private placements in 2024 and 2025 were both non-brokered, meaning the company did not use an investment bank as an underwriter. Instead, it leveraged the Lundin Group's extensive network of international institutional investors. In both the $76.9 million and $175 million placements, the company paid a 5% cash finder's fee on only a portion of the proceeds. This minimizes the cost of capital compared to traditional brokered offerings, which often carry higher fees and warrant coverage. The primary participants in these financings include specialized mining funds and the Lundin family, whose continued participation serves as a strong signal of confidence to the broader market.
Investing activities and the Lunar contribution. Beyond exploration, NGEx's investing activities in 2025 included a strategic CAD $4.35 million capital contribution into Lunar Royalties Corp. This cash outflow was used by Lunar to acquire the royalty interests on Los Helados and Lunahuasi and to fund its initial working capital. While this was a cash outflow for NGEx, it resulted in the company receiving a 19.9% equity stake in a newly listed royalty vehicle, representing a diversification of its asset base rather than a simple expenditure. Valuation analysis. Valuing NGEx Minerals requires a departure from traditional earnings-based metrics, focusing instead on relative asset value, peer comparisons, and the Vicuña District premium. Relative valuation, price-to-book, PB, analysis. Because NGEx is pre-revenue and unprofitable, the price-to-book ratio is the most frequently cited relative valuation metric. The extreme premium of NGEx's PB ratio, 41.4 times, compared to the industry average, 3 times, is a reflection of the market's high expectations for the Lunahuasi project. In the mining sector, a high PB for an explorer usually indicates that the market has already priced in a significant portion of the discovery's potential value before it is officially recorded on the books. The historical average PB for NGEx has fluctuated between 15 times and 45 times, suggesting that the current valuation is at the upper end of its historical range.
Enterprise value and resource benchmarking. A more technical approach involves looking at enterprise value per unit of resource. With an EV of approximately CAD $5.3 billion post-2025 financing, and an indicated resource of 18.4 billion pounds of copper at Los Helados, NGEx trades at an EV per pound of approximately US 20 cents. While US 20 cents per pound may seem low for copper in the ground, this is typical for large tonnage, lower-grade porphyry deposits that require multi-billion-dollar capital investments for development. However, this metric does not account for the high-grade discovery at Lunahuasi, which carries a much higher value per pound due to its superior economics. Analysts from Jefferies and other firms maintain a moderate buy consensus, with price targets ranging from CAD $29 to CAD $29.64, suggesting an additional 12 to 15% upside from late 2025 levels. The Vicuña Playbook Premium. The valuation of NGEx is heavily influenced by the recent M&A activity in the Vicuña District. The CAD $4.5 billion acquisition of Filo Corp by BHP and Lundin Mining provides a direct benchmark for NGEx. Filo Corp, like NGEx, was a London-led explorer with a massive copper-gold resource in the same district. The fact that major companies, BHP and Lundin Mining, are willing to pay multi-billion-dollar premiums for these assets creates a speculative floor for the NGEx share price. Strategic reorganization, the Lunar Royalties spinout. In late 2025, NGEx Minerals completed a reorganization through a statutory plan of arrangement to spin out its royalty interests into a new entity, Lunar Royalties Corp.
Mechanics and shareholder impact. The spin-out was designed to unlock the value of the royalties held by NGEx on its own projects, which were not being appropriately valued by the market within the exploration-focused parent company. Distribution ratio. Shareholders of NGEx received 1 common share of Lunar for every 4 shares of NGEx held. Asset portfolio. Lunar acquired a 1.38% NSR royalty on the Los Helados project and a 1% NSR royalty on the Lunahuasi project. Listing. Lunar Royalties commenced trading on the TSXV Venture Exchange in late December 2025. Corporate retention. NGEx Minerals retained a 19.9% ownership interest in Lunar, effectively keeping a foot in the door of the royalty business while distributing the bulk of the value to its shareholders. This reorganization serves two purposes. First, it provides NGEx shareholders with a separate, yield-oriented security that can be valued independently of the exploration risks. Second, it creates a dedicated vehicle, Lunar, that can pursue the acquisition of other royalties in the Vicuña District, potentially becoming a consolidated royalty play for the entire region. Management. The leadership of Lunar Royalties remains closely aligned with NGEx and the Lundin Group. Adam Lundin serves as the president, CEO, and chair of Lunar, ensuring that the new entity adheres to the same strategic principles as the parent company. Dr. Wojtek Wadzicki also serves as a director of Lunar, providing technical continuity between the exploration at NGEx and the royalty interests held by Lunar.
The Lundin management factor is a primary driver of the investment thesis for NGEx Minerals. The team is characterized by a high degree of continuity, with many executives having worked together for over a decade across multiple successful ventures. The management team's history of M&A exits is a critical component of the NGEx valuation. The Lundin Group has a proven ability to discover large assets and sell them at the top of the market cycle or to strategic partners. Despite the favorable geology and strong management, NGEx Minerals faces significant technical and operational hurdles that are inherent to high-altitude Andean mining. Elevation and seasonality. Both the Lunahuasi and Los Helados projects are located at elevations exceeding 4,000 meters in the Andes Mountains. This presents several challenges. Operational window. The drilling season is typically limited to the South American spring and summer, October to May. Infrastructure requirements. Operations at these altitudes require specialized equipment, oxygen-enriched environments for personnel, and robust logistics to manage harsh weather conditions. Logistics. A critical 220-kilometer road is required to support the large-scale development of the Vicuña District projects, a project currently being planned by the Vicuña Corp joint venture, BHP Lundin Mining. Permitting and joint venture complexity. The Los Helados project is subject to the joint exploration agreement with Nippon Caserones. While the relationship is currently productive, any development would require significant coordination between NGEx and its Japanese partners. Furthermore, the project's location in Chile means it is subject to the Chilean Mining Code and the specific regulatory oversight of Corfo and the Chilean Nuclear Energy Commission, given the proximity of some lithium-bearing areas.
In Argentina, the Lunahuasi project is currently in the exploration phase. Transitioning to a development phase would require securing numerous provincial and federal permits in San Juan. While the current administration has been supportive through the RIGI regime, the long-term stability of Argentinian mining regulations remains a point of observation for all developers in the region. Comparative analysis: NGEx Minerals versus Vicuña District peers. The emergence of the Vicuña District as a global mining powerhouse has led to the formation of the Vicuña Corp joint venture between BHP and Lundin Mining. This venture now controls the Josemaria and Filo del Sol deposits, leaving NGEx as the only remaining major independent player in the district with high-grade exploration upside. The comparison shows that while Los Helados is lower grade than the core of Filo del Sol, its massive tonnage makes it a vital component of any district-scale development plan. Meanwhile, the initial results from Lunahuasi suggest it could host grades that exceed the high-grade core of Filo del Sol, potentially making it the most profitable asset in the district on a per-ton basis if the scale continues to expand. Synergy and M&A outlook. The close proximity, 9 kilometers to 17 kilometers, of these assets suggest that they will eventually be integrated into a single operating complex. The formation of the BHP Lundin Mining JV is a logical precursor to an eventual bid for NGEx Minerals. By developing Josemaria and Filo del Sol together, the JV partners are creating the infrastructure, roads, power, mills, that would make Los Helados and Lunahuasi much more valuable as satellite expansions. For investors, the endgame is likely a takeover of NGEx by the JV at a significant premium once the Lunahuasi resource is better delineated.
Financial sustainability and future capital requirements.
Despite having nearly $200 million in liquidity at the start of 2025, NGEx Minerals will likely require additional capital if it chooses to move Los Helados into a pre-feasibility study, PFS, or feasibility study phase. Projected capital needs. A 25,000-meter drill program at high altitude typically costs between $30 million and $40 million when accounting for helicopter support, camp costs, and assaying. With two such programs planned, Phase 3 and Phase 4, the company will utilize a significant portion of its current cash by the end of 2026. Furthermore, advancing Los Helados and Lunahuasi toward production will require hundreds of millions of dollars in engineering, environmental studies, and community relations. Given the company's track record, these funds will likely be raised through further equity issuances or by selling a minority stake in the projects to a strategic partner, similar to the deal struck between Lundin Mining and BHP for Josemaria. Debt capacity and alternative financing. While NGEx currently has no debt, its large resource base at Los Helados could eventually support project-level debt or a streaming agreement. However, the Lundin Group historically prefers to remain equity-heavy during the exploration and early development phases to avoid the restrictive covenants associated with debt. The spin-out of Lunar Royalties is another creative way to generate value for shareholders without diluting the parent company's cash position.
Conclusion. NGEx Minerals Ltd. represents an opportunity for investors to participate in the discovery-to-exit cycle of a Tier 1 mining asset. The company's primary strengths are its dominant land position, its high-grade drill results at Lunahuasi, and its affiliation with the Lundin Group management team. The expanded balance sheet and cash flow analysis reveal a company that is expertly funded and managed for growth. While the valuation multiples, 41x PB, are high by industry standards, they are consistent with historical precedents for London-led explorers that have successfully exited at multi-billion-dollar premiums. The strategic spin-out of Lunar Royalties has further enhanced the shareholder value proposition by providing exposure to a lower-risk, yield-oriented security while the parent company continues its high-stakes exploration programs. The key upcoming catalysts for the company include ongoing assay results from the 25,000-meter Phase 4 drill program at Lunahuasi, which will determine if the system has the scale to support a standalone mine. Potential technical updates or mineral resource updates for the high-grade cores of Los Helados. Progress on district-scale infrastructure projects by the Vicuña Corp JV, which will directly de-risk NGEx's assets. In summary, for peers in the investment management and mining sectors, NGEx Minerals offers a compelling combination of massive resource scale and exploration upside, managed by a team that has consistently delivered massive shareholder returns through strategic M&A. While the technical and jurisdictional risks are real, they are mitigated by the company's strong financial position and its location within a district that is rapidly becoming the new center of gravity for global copper production.